Joining me now is Bill Alpert. He's a journalist with Barron's. Bill, so great to see you. Thanks for joining us this evening.
Good talking with you.
Yeah, thank you. Let's talk about private credit because you did a great story. You had a lot of great references and people that you spoke with. It's been a challenge. I guess my first question is, it has been a challenging time in the short run for private credit.
I've been frantically keeping up with how investors are pulling their money from these funds, which mostly lend to companies that are being bought out by their sister funds in private equity. So uh, they got money just gushing in the years up until last year, maybe. And as interest rates started drifting down everywhere, investors have been yanking their money from these funds. Um, so, the funds have been scrambling to, give people some of their money back.
Yeah, certainly. If you invest money, you want to get your money out. Certainly, that's important. I've been reading, and I'm sure you have, in your own writing about institutions maybe pulling back from allocations to private credit. But this has a completely different relevance for the retirement industry, doesn't it, Bill? Because there is consideration, at least in the retirement industry, or as we've been reading and you've been writing about, that 401ks will soon have access to the private markets.
Yeah, so I mean, the timing is amusingly awkward, and that prompted my reporting in the article. So, coming up into this recent run on the bank at these funds, they were golden, and the retirement industry, the people who run 401ks, were pressing the regulators to let them put some money into these kinds of non-listed funds, and they've been off limits in up until now. You could get sued very easily if you were running one of these funds or an employer sponsoring them for your employees, and you put any of the money into stuff really other than stocks and bonds.
And I guess we're waiting any day. We're supposed to get some type of direction. There was a executive order from the president, President Trump, directing the Department of Labor to establish some regulations and guidelines. So we're waiting on that. But you use the term, and I agree with you. It's a little awkward that maybe performance maybe is a little lacking in the short run. But you've been talking to a lot of experts in the industry that maybe I don't want to use the word anomaly, but maybe for the long-term investor, these might be appropriate to include in an asset allocation.
Yeah, so again, as all of these headlines are appearing, the Labor Department is expected any day to put out a proposed rule that basically would give legal cover to the
Mhm.
401k industry to include some of these assets. So, as we said, awkward timing. And it's not really that the performance is, worrisome in these funds. Or that the loans are going bad on a scale like we saw in the mortgage meltdown in 2008. Nothing like that. It's just that the kind of interest profits that they're reaping on their loans have narrowed some, and they're floating rate loans, and so the base interest rates have been going down, as the Fed has been working on for the last year or two, and so that kind of reduces their profits, and that's why we're seeing it's mostly rich investors pulling some of their money that they had thrown at it in recent years. So, yeah, kind of funny timing. But
Yeah.
I talked to the people who run these funds at BlackRock and at T. Rowe Price, and they have a different time horizon.
Yeah, and do you think I'll ask you about that in a second, but do you think that given the circumstances, and the fact that the Department of Labor is going to be issuing some level of regulations in the short run, do you think that there's investors, fiduciaries, people that have responsibility, that there should be extra caution, or maybe there should be additional due diligence, maybe is the right word. Should there be additional due diligence when you're thinking about adding these types of products to your retirement program?
Again, I'm not sure that the risk in these funds is changed so much in the last quarter or two, but I do think that it's kind of telling you about the tastes of investors.
Mhm.
So, even though I expect the, Labor Department and the Securities and Exchange Commission are going to, clear away the, legal obstacles that they can, um, whether employers and their employees are, actually going to pick these funds if they appear on the menus, will be affected by, how, the individual investor feels about these things.
Yeah, and you said that you spoke with some of the managers, and they had a different thesis that maybe longer term. So I don't want to paraphrase what you wrote. You can do that, but in the short run, there may be some challenges, but longer term, this fits into a portfolio, and it's not 20%, 40%, 60%, or even higher. It's a small portion of a portfolio.
Exactly as you said. So they say that it fits with the time horizon of retirees. So I don't know. Again, a short-term investor, the wealthy people that bought into these things in the last few years, their money moves around a lot more. But in a 401k, most of those these days are target date funds.
Yep.
And so you're putting money into them for 20, 30 years. And then you're, taking your money out over another 10 to 20 years. And so, these non traded private investments in corporations, in loans to those corporations, there are real estate, private funds. There are what they call infrastructure. And these days, that's loans to the companies that are building these ginormous data centers for AI. Those are, 5, 10, 20-year investments.
Mhm.
And that kind of matches the horizon of retirees.
Yeah, yeah, absolutely. Uh, just in closing, Bill, you do a lot of writing. You cover this segment of the marketplace. Are you looking to follow up on this article once the new regulations come out, or will you perhaps be going in a little bit different direction?
So we're feverishly gathering string for the day that this stuff's announced. When it's announced, I mean, that's not really going to be a starting gun because it's a regulation. So they take comments.
Mm,
Then they're supposed to digest the comments and put out a final rule. So the final rule, may take a year to appear. So, these things will appear they'll be offered by the Black Rocks in small amounts starting, a year or two from now. And then you just have to see whether
yeah,
the employers put them on the menus and then, whether employees pick them.
yeah, yeah. I mean that is the market. in a nutshell. Well, Bill, excellent writing. We really appreciate you coming on the program. And look, we look forward to having you back on the program, whether it's related to private credit, 401ks, or anything else. You have a good rest of the day, and we look forward to having you back very soon, sir.
Thanks so much, Jeff.
Well, thanks for watching. And don't forget, we're back again tomorrow morning with another great expert and another great topic. You can tune in right here Monday through Sunday at 7:30 a.m. Eastern Time. And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place, delivered directly to your email box. Check it out at our website.